Hello traders, this is a DAX recap video for Friday, February 22nd, and this is the chart. This here is the chart that was posted before the open, along with the morning notes. So this zone was our main zone of interest, support and bull bear zone, meaning that bulls are dominant above and bears would be dominant below. Bias above it is neutral bullish. Neutral bullish meaning that you are not going to be raging bull above it, but neutral bullish means that you are favoring longs but from the good location. Below it we would be bearish, because if you had a breakdown and a pullback, that pullback usually, because everybody now is going to press to the downside, that pullback really isn't going to touch this zone to the point. Maybe it will, but you don't know that, and you are then prepared to short some smaller pullback, get in. That is what a bearish bias means, and the same goes from bullish bias. From bullish bias, when you're bullish, you don't want to wait that market goes to the bottom end of the zone. You're front running, or you're waiting at the edge of the zone, or you're front running the zone. You're going in. And neutral bullish means that we are going to wait for the market to get to the zone and then to the good location, and then you're long. And that is basically said here in the morning notes, and also that yesterday high zone is this with the December 3rd gap. It was not filled since it was tested yesterday in pre-market. This is it. This was yesterday high made in pre-market, and they were testing this gap, but gap isn't filled because gap is from the cash index, which is only regular trading hours, and that sellers can react here on the first test, and they did, as we can see. But where were the opportunities? As when market opens, as always, plot pre-market low and pre-market high on your charts. Now you can observe that pre-market range, so this is between these two lines. Obviously this is the pre-market range. It was very narrow, only 32 points inside it, and here was our entry after this move, pullback to the zone, and you should really enter here even before the open, like 10 or 15 minutes before the open. Open was here, this first bigger candle, this was the open, so open was like on 414, let's say 4 or 5 points above the zone, good enough. If you can't trade pre-market, price was just like 4 or 5 points above the zone, so this is also good entry either here in the pre-market 15 minutes or 10 minutes before the open, or immediately after the open with your stop below the zone, because this is the main support, and support stays support until it's broken. You can see that the market was trying multiple times to break this zone, and that didn't happen. When that doesn't happen, then when this is a show of weakness, this testing, and yet nothing is happened, and you could say, okay, when something is signaling weakness and that doesn't happen, then it is not a weakness. As the same goes as when sell signal fails, it becomes a buy signal, and the market can test larger time frame support multiple times and still not produce anything. And when market go, you see how this move is much better than this. Why is that? Because there are traders here that are trapped, that are shorting, who was sellers yesterday. They need the market to make a breakdown, and if it doesn't make a breakdown, they are going to close. And hence we got this slightly bigger move than yesterday, and better move, quicker move. And this was the entry. Here, exits, you can exit targeting this middle zone. As I said, the middle zone is here for gauging the market strength, and as always, those kind of minor zones you can use for gauging the market strength and go in the position on a pullback or as a target. You don't really want to fade this zone because it is in the middle of our two zones of interest, and this is support here, bull bear zone here, and this yesterday high zone here. And those zones in between them you get just 55 points. So it's really not a good idea to fade this zone, even if you can see they had some reaction here. And now here at this point you are observing this. Okay, is this now when the market made its move above pre-market range and slightly below it, but still above previous cash close? What is this now? Are they going to go lower and then make a breakdown? You certainly wouldn't bet on that. You would be patient and wait to see what is going to happen. And then you saw that they're going higher, and you could jump in on this break of the pre-market high with the longs, or even better, catch it on a pullback here. It would be a school book trade. So this trade here, either you're going along slightly before the open or immediately after the open. Closings of this trade should really be expecting the market to fill this gap or modest target just to this first zone. That would be your first trade. And the second trade after this entire move, now you could attempt a short here, but note that if you are attempting a short here as a first test of the zone, this is a good zone from yesterday high and so on, and gap is filled, but your stop must be here. This is the invalidation point for this trade. We can see now in advance that you could take this trade here with a very small stop, but in real time you don't have that information and you don't know, are they going to poke above it a bit, or maybe just go to here and stop you if your stop is too small. So invalidation point is here, and if you want to make a 2-hour trade out of it, then the market would need to come all the way down to this zone again. And they didn't, they just go to here. So if you are shorting here after this, when you're seeing that they're not even touching the pre-market range, you should really get out. But this is just one small opportunity, and something that we really shouldn't bothered about, because this move showed us, this move above and holding above this pre-market range, that the bulls are the ones that drive this bus after all of this. And you could also draw yourself a rectangle like this and observe that the market was testing this zone, making lower bounces, and yet we didn't get the breakdown. What that means? That means they're going higher, that this is holding, and that we are above this zone, neutral bullish, meaning we are going to go on good location. This is good location, and also this here is a good long, because not only you can draw fib retracement like this. Observe that bottom of this middle zone is 38.2, and at the top of this range is a halfback, and market is not going below halfback. And after observing this movement, 440, 445, there is your long. Your stop is inside this range, because market is going away from this pre-market range, and now you're targeting near yesterday high. Yesterday high is this. Now your target is here, and that is another long. And that is it for today. This was these two opportunities, only longs for today, and good enough for today. On the higher time frames, nothing really is different. Market still in the grind up mode, both on the S&P and on other US indices. As you can see, they are just grinding higher and nothing really to sell here until we see a good move to the downside. And that is it for this video. I wish you good trading and good night.